we did touch on Brexit briefly, but what do you think? I mean, how do you think Brexit will affect the property market?
This is an interesting one because Brexit has already affected the property market quite significantly. We had all that uncertainty leading up to the general election results at the end of 2019. And then once we had certainty, and it may not have been the certainty or the outcome that everyone wanted, but once we knew what was happening in that we were leaving, you and I both know what happened to the property market, as does everyone tuning in. And we had a very strong start to the year because the certainty was all we needed. Everyone just needed to know which direction it was. So the property market has already sort of felt the impact of Brexit to a large degree. The secondary impact on the property market would come from any sort of seismic economic event next year due to Brexit. The likelihood is the government will create rampways so that industries can overcome the hurdle of what might happen at the end of this year and into next year, and then get onto a solid footing again, no matter whether we have a deal or no deal. They will be making sure that industries can make that move. There may be a bit of disruption as that all comes to bear. That will have impact on the economy, and that could knock on maybe on sentiment, but it will be affecting the whole of the economy. What we have seen is a global pandemic this year. We've dipped into recession and the housing market has continued. So I do think it comes back to those broader trends that we've discussed that will probably continue. Everyone's known what might happen with Brexit and they're continuing their buying journey anyway. So I think there's parts of the market that might just ride through Brexit and look through it to a certain extent.
Yeah, absolutely. There's a lot of unknown still to come when it comes to Brexit. And I think what we do know is that the UK has historically been seen as a safe investment for overseas buyers, and hopefully there's no reason for that not to continue, and it may become more attractive if the pound were to drop slightly. But we do know that due to coronavirus, the government have invested the biggest monetary stimulus on record, with 380 billion apparently already injected into the economy since March, and a further 150 billion next year. And this quantitative easing is different to before, as last time the money went to save the banks, whereas this time the cash has made it through to households directly, resulting in average saving ratios against salary increasing from around 10% to 30%, which has never happened before. And of course, to a degree, none of us have been able to spend our money in lockdown. We haven't been able to go out for dinner or on the holidays we might usually enjoy. We haven't been commuting. So generally people have put more cash aside. There's a lot of potential spending in our system, which is great for the economy. We just need households to spend it next year. And so long as confidence remains high, that we should see that cash go through. So hopefully the economy will ride through it. But a no-deal Brexit, I think we're thinking, may impact the confidence and then in turn the property transactions, but we'll need to wait to see on the detail around that going forwards. What about the 2% surcharge? Do you see that impacting the property market in the UK for overseas buyers?
For the areas of the UK that are reliant on those overseas buyers to a large extent. So we're probably thinking central London, maybe just some areas outside London in the southeast, and some very small areas dotted around the country, which of course are also very attractive to overseas buyers. You could see perhaps that front-loaded again activity leading up to the stamp duty holiday, because that additional 3% is still applicable, but it was on much lower values because the rest of the stamp duty holiday. So there could have been a bit of activity front loaded there, with the added emphasis, if you get in before that deadline, you additionally don't have to pay the additional 2% surcharge. So you could see a lot of activity happening now, and again that might then reflect in what happens in the following months. But as you said, a lot of people will be looking at the UK in terms of investment. It remains a really popular investment destination, and the charges, a lot of investors will be making their decisions on a global basis. And the entry tax for UK property may have risen over the last 5 years or so, or 8 years, quite a lot for overseas investors. But the holding tax, or the kind of annual taxes on property, are nowhere near some of the other global destinations. So over time, it starts to make more financial sense and it starts to even out. So they will be making decisions based on those kind of comparisons, rather than just straight on, oh, we have a rise in taxes. The market tends to absorb these rises, and we think it will probably do the same this time around.
Absolutely, and we completely agree. We don't think that that the 2% additional taxes is going to have an impact. We certainly think there's still deals to be done, and the UK is going to be seen as a great place to invest.